Welcome to a new market update, and today we're going to discuss the speech of Powell. He is speaking today. He will be doing that tomorrow as it's a 2-day event, and finally the markets are jumping left and right. They are moving, hence why we're doing this update right now, including all the news from Powell, as indeed Powell has remained relatively hawkish. And what is that going to mean to the markets? That's why we're going to do these updates. But before we continue, make sure to hit the like button, subscribe to this YouTube channel, check out our free trade letter, and check out our platform as well. This month we have started and we were short on Ethereum, so the profits have been locked. Check it out in the description beneath. So today we've got an event taking place, and therefore Powell has been speaking, and he has been giving some insights on what he will be doing with the policy. And the stance was that we're going to have a relatively hawkish Powell, in which we could be getting a higher federal funds rate, which means that he is hiking his interest rates on a monthly basis. There are events, and based on the data when it comes to CPI, inflation, labor markets and more, he decides whether he wants to continue the policy. And in the past year we have seen that they have been increasingly hiking the federal funds rate, or the federal policy rate, with a very fast pace. And now the overall consensus was that we were going to have a stable market, in which most likely they will pause the hiking process. However, all of a sudden the inflation data comes in higher, and as a result we can see that the markets are correcting right now, and that the Fed wants to continue doing its policy. The question is, are they going to do so? And the question is, are the markets buying it? And what's actually taking place when it comes to the inflation data? The inflation data has been twisted a little bit. One argument is that China wakes up and gets out of the lockdown, which means that there's some sort of higher prices coming out of that country, and therefore the inflationary data is a little bit higher at this point. The second one is the metric in which is being used for determining the inflation data has been adjusted, which means there's a little higher number coming out right now, and now we are just continuing the pace. So the CPI data is going to be important, which comes out next week. This week we also have unemployment data, and the labor market remains to be very tight, and that's also what Powell has been saying. But what has he been saying some more? It's what we can see on this Twitter account, which is Financial Juice. It gives you all the recent data for what Powell has been saying, in which he's still expecting a soft landing to be taking place, and he also sees that there is likely a level of interest rate to be higher than previously predicted. He also makes the standard basement that he will be making decisions based on data and its implications for the growth and inflation outlook. And right now it doesn't look great. He also says there's going to be a bumpy ride when it comes to the inflation, and right now we are definitely into one of those bumps. What he said even more, there's still a long way to go in bringing inflation back down, and the road is likely to be bumpy, as I said. And he also said that they are probably going to continue hiking some more, which resulted into the federal policy rate futures price in a greater likelihood of a half-point rate hike in March, which is higher than expected. Right now the markets are pricing in 25 bips, and now it's going to be 50 bips, and as a result the markets have been dropping down a little bit. He has also been mentioning that the rates are going to go higher and faster and quicker. So it's not looking great for risk on assets. The expectations were like this already. The Fed swaps repriced to favor 50 bips hike in March over 25 bips. Is there anything else? There's something about supply and demand. So the core argument in the final chapter, which we have been seeing when it comes to the markets, is expecting higher interest rates and also faster pace. Also expecting the rates to stay higher for longer, and hard to get inflation down, and no clear signs of it yet. Risk on selling off based on this news, plus the likelihood of 50 bips rate hike in March, have increased. But then we also saw that the markets, include for Bitcoin, have been making a slight jump down or drop down, taking all the liquidity, and we bounced back immediately. But before we're going to discuss Bitcoin, we can discuss the dollar currency index, which we have been mentioning previously, in which the US dollar currency index is most likely going to trend a little bit up from here. There's a clear resistance level a little bit higher from this point, and we can see that based on the speech from Powell, we have a relatively strong bounce taking place here. Then also we've got the yields, which were bouncing up a little, but it's a fake bounce until now, as the markets are seeing or saying that they are not pricing in this actual impact, and they are not suspecting the Fed to continue raising their interest rates even more. What does it mean? If the yields are going to fall, it means that they expect, or the markets are expecting, the Fed to not be able to continue the policy, and they are saying he's false. So in that case, you clearly want to see the 10-year and actually the 2-year yields to rally up even more. And at this point, the 2-year yields have been rallying, the 10-year is not following through, and we're getting to a point of the maximum rally here, and this entire strength of the yields is not great for risk-on assets, hence why you want to see a reversal on the yields, which is usually inducing strength on risk-on assets. And what we have been seeing here, the period since November 2022 towards February 2023, it resulted into weakness on the yields, and that's also resulting into strength on risk-on assets, and this recent run has not been pushing the price of risk-on upwards, but we are getting to a point where it might be turning around, that this exact speech from Powell might be a turnaround, or tomorrow, or CPI from next week. At least the markets, when it goes for the longer term yields, are not expecting Powell to stand up and continue this policy. So that's what we are seeing here. Now when we're looking at the indices, we can see it, right? We have had this beautiful rally, and since the yield started to run up, we have been seeing a correction taking place. However, today we had a pretty substantial move. We had a drop down, even lower, in which we bounced back up immediately. And now if we flip back towards Bitcoin, we can see the exact same. As I just said, from November, which we have here, we have started to already drop on the yields, which was also the first push on the Bitcoin price action. Yields have been starting to rally upwards since the beginning of February, and the price has been stalling overall. What do we see in terms of price action for Bitcoin? We see a period where we are consolidating right now. The liquidity was most likely going to be taken, which has been taking place, but we are still in a higher time frame support area here, which is inducing potential upwards momentum, in which the markets are not expecting the Fed to continue the policy, or that the data will be coming in lower, which will push up the prices for risk-on assets, including Bitcoin. So what are we looking at in terms of a technical standpoint here? Well, we've got a clear resistance point at 22.6, and we had a clear support level around 22k. This sweep downwards is a clear level that we had to test, and which we have done. We've taken all the liquidity, hence why you can see the high amount of volume here, and we are bouncing back up, which is a result that after taking all the liquidity on the downside, most likely we are going to return or make a reversal on the markets, through which we could be starting to test the level, and especially if we break 22.6k, we can start rallying towards 23.5. That's the update for today. It's still into long entries at this point. If we lose 21.5, I'm going to look at 19.7, but this is a good bounce, a good reaction. Markets are not buying the actual continuation of the hiking process, especially since if he continues to do so, it's going to crash the entire market. Tomorrow I'll be back with a fresh new update. Make sure to hit the like button and subscribe to this YouTube channel. Ciao.